The Canadian dollar is in focus ahead of the Bank of Canada interest rate decision on Wednesday. So to discuss the potential of a rate hike and the impact of a challenged oil price, I'm joined by Peter Dixon of Commerzbank. Hello to you. Thank you for your time today. So first of all, I suppose chances of any move at all, what do you reckon?
Well, the markets are saying 90%.
Yeah.
The analysts are saying about a two-thirds chance. And funnily enough, we are in the camp which says the bank will likely hold on for for a little bit longer. So we're very clearly in a minority there. There are strong reasons for a rate hike, of course. I mean, the economy's doing okay. The employment numbers from last week were pretty strong as well. So I think everything's sort of pointing in the direction of the possibility that rates could be hiked. So I wouldn't say I'm terribly confident in our call, I have to be honest.
Mm-hmm. What about the Canadian people? Because a lot of them are in debt. So what does this mean for them?
Well, I think that's one of the issues which the Bank of Canada has to be aware of. Obviously, when you've got a heavily indebted economy and low interest rates have helped that, together with a fairly a solid banking sector over the course of recent years, which has facilitated that debt build-up. We're in a situation where the bank has to tread very carefully. But I think the problem is the longer that the bank leaves it, the bigger the problem is going to become. Mm-hmm. So at some point they're going to have to bite the bullet. Whether it's this week, whether it's in 6 months' time, it doesn't matter. At some point somebody's going to start feeling the pain. But I think it's a case of how fast will rates rise, which will determine how much pain the average consumer suffers. If it's a one and done for a while, it will be shot across the bows. Consumers have a chance to do a little bit of debt consolidation. If this is the start of a more rapid process, then there could be trouble ahead.
Okay. Talking of trouble, let's have a look at the currency now and just digest it and have a look at and see what's happening, because it's a commodity currency. Now, this is important considering the challenged oil price right now. I'm surprised that it's not lower than what it is now.
Well, actually, the currency's gained an awful lot over the course of the last few weeks, because I think it's basically the market to say, look, a rate hike's coming, it's a done deal, it's and it's all in the price. I think what that means is if the Bank of Canada fails to deliver, you could see quite a sharp currency sell-off over the course of the next few days. And I think it's interesting because, as you said, it is a commodity currency, but to a large extent, the dollar has decoupled, if you like, from what's been happening to the oil price over the course of recent weeks, which I think tells you that for the moment at least, it's less of a commodity play and more of an interest rate play.
Okay. And where do you see it going this week then?
Well, I mean, I think that if we don't get the expected rate hike, then I think we're talking about potentially anywhere between a 2% and a 5% sell-off. Mm-hmm. If we do get the rate hike, the question then is the markets will focus on what happens next. My guess is that because everything's in the price, we shouldn't really expect much of a movement. My guess is that we'd stay pretty close to where we are now if the bank does as the markets anticipate. But I think the risks clearly are to the downside, given that risk-reward profile.
Mm-hmm. And just in conclusion, sometimes when we talk about the Canadian economy, it can go under the radar. What are the wider implications of this?
For Canada, you mean?
Yeah.
Well, I mean, obviously the Canadian economy is to a large extent dependent upon what happens south of the border, and as you say, what happens to commodities. I think to a large extent, however, it's a much more widely diversified economy than people give it credit for. It is, after all, a G7 economy. The wider implications are that the Bank of Canada is I think beginning to join this train of central banks which are beginning to think about a tightening of policy, having spent the last sort of 7 or 8 years in ultra loosening mode. The wider implication, I think, for Canada in particular, however, is that if we do start to see a tightening of policy, as you pointed out earlier, this could mean that, given that Canada is one of the more heavily indebted economies in the G7, that it could start to slow very sharply, and in conjunction with the sort of fairly weak commodity profile, it could mean that Canada starts to underperform quite significantly.
Okay, Peter Dixon, we'll leave it there. Thank you very much indeed. So we await Wednesday for that Bank of Canada interest rate decision. Thank you for watching. Goodbye.